All right, in today's video I'm going to take a look at energy. I think it's after a tremendous run for 2 years, it's probably time to give energy a little bit of a break. This is one of the mistakes that a lot of novice or even intermediate level traders and hedge funds make. They get groupthink on one sector when it's had a strong, powerful trend, and they extrapolate that trend into the future indefinitely. But at some point the momentum runs out, the trend ends, and then you either retrace some degree or you go sideways for a long time and just don't make any progress. A very difficult trading environment. So I've covered this principle before. Difficult markets are followed by easy markets, and easy markets are followed by difficult markets. And I think there's the potential anyway for energy to become a difficult market, and it could be difficult for even as long as a year. So here is oil. This 114, this was the rebound level. Let me see if I can get the weekly chart up here. The rebound level from the crash, whatever it was, 10 years ago. All right, so here was the bubble in energy in 2008. We had the big crash, and then we have the rebound. There's usually some kind of rebound out of a crash, and this formed a pivot at about 114, 115, and then we had several tests of that level, and then we started the bear market in earnest. And then the bear market ended here with that brief move where oil went negative. I think it was about negative $35 for a day or two. That was the bell ringing that the bear market was over. But this 3-year cycle is getting pretty mature, and this move is a huge move off of this bottom. So after a very long period of difficult trading, we got a period of very easy trading and a very, very strong trend. But the first attempt to regain this pivot here has failed. And now if I go back to the daily chart, you can see we failed to hold that breakout. We didn't make it to all-time highs at about 147. We came back down, and this is clearly a daily cycle low. And then we get the bounce out of that daily cycle low, but that bounce just hits a brick wall at that 115 level and can't get through it. And now it's rolling over again. Price is holding below the 10-day moving average. 10-day moving average is turned down. We're pretty close to testing this daily cycle pivot. Breaking that pivot would signal a failed and left translated daily cycle. This cycle is still very early. So I don't really expect this daily cycle to put in a final bottom till probably sometime in May. These cycles can run rather long. You can see this daily cycle here ran from the beginning of December until it bottomed here in mid-March. So about 4 months. You know, we're not even a month into this, so I would say at the very minimum we probably got at least another month. And one of two things can happen. We can either just continue to trade like sharply down and you know, maybe a move back into the 80s or 90s, or probably more likely, in my opinion, is it's going to be a very choppy market that's back and forth with convincing counter trend moves like this one right here that gets people back on the or gets people long again, but prematurely. Hasn't finished bottoming, and again, based on that huge move that we had coming out of the low in March of 2020, we could spend a year or more going sideways in this market, and that's exactly what happened with gold. So let me put the gold chart up here. And let's widen this out a little bit. All right, so we get the big move in gold, big trending move, and the kind of the blow off top, and then everybody is convinced that we're going to have a mild and a short correction, then we're off to the moon again, and the exact opposite happened. That long, powerful trending move evolved into a very difficult, frustrating sideways churn that has gone on far longer than anybody expected. However, gold may be the one market I think that might be ready to produce a strong trend again, and I've covered that in my nightly report, so you can find that analysis there. I'm not going to go into it here. Energy, however, on the other hand, different story. It's been trending very strongly for a long period of time. I suggested people get into XLE energy stocks back here in December of 2020, and we've just been holding that position, but now we're this has been a very strong, powerful move, and now it might be time to just take profits and get on the sideline in anticipation of energy being transitioning into a difficult market for many months. You can see here we've come up and we've tested this resistance here multiple times. I'll widen this chart out and see if we can't show you what that resistance level is. So here's this peak. So we've hit that resistance zone. I suspect what could very well happen is we'll get a false breakout above this when oil gives us a bounce, and then everybody's going to be buying this except smart money, which will sell into that breakout. So I think a breakout here is probably going to be a bull trap, and then we'll come back down, and again we may have many months of going sideways, or we may have to come back down and test, or even maybe marginally drop below the 200-day moving average. And most people that watch the videos know that I'm a big believer in regression. When markets get stretched too far above the long-term mean, it almost always evolves into one of two things: either a big nasty correction that will drop back to the moving average, or a very long, frustrating sideways market that allows the moving average time to catch up to price. So you can see here XLE is just stretched insanely far above this 200-day moving average. The odds of this breaking out and then we getting another strong trending move that's going to go another 20, 30, 40 points, pretty slim in my opinion. I think we're just too far above this long-term moving average here. So if we do get a breakout above this, it's probably going to be a false breakout. Big money will probably sell into the breakout, and then we'll either have to go sideways for 6 months to a year, or we'll have to have a very scary correction that would come back down and retest this 200-day moving average, or maybe even drop below it. So I think it's time for to give energy a break, and this always happens right when the fundamentals are the most bullish. We've got the war going on in Ukraine, so the fundamentals will say that there's just no way that energy can go down. I heard the same thing about Bitcoin a couple of years ago. The fundamentals were too strong. There's no way that Bitcoin could go down. Basically the same thing for gold a year and a half ago. That the fundamentals were strong for gold, and there was no way any correction was going to be brief and mild, and then we were off to the races again. And that's just not the way markets work. Once a market has trended strongly for a long period of time, smart money just starts looking for something else that's undervalued to put their money into, and to try and get into a sector that has the potential to trend again. Something like these energy stocks that have been trending for 2 years and already produced a massive move. Probably institutional money's probably not going to be piling back into this expecting another big huge move to the upside. So I think the upside's probably limited in energy. Same thing in the stock market. While we are coming out of this yearly cycle low, let me put the weekly chart here, and we are coming out of this yearly cycle low, but again, we've just had a massive trending, very strong trending move so far, and prices stretched way too far above this 200-week moving average. So the best we're going to be able to hope for in the stock market here is probably a sideways turn, I would say, at least into the elections, and probably we've got another 4-year cycle low out here in 2024, so probably we're going to churn and just be in a difficult environment for maybe as long as a year, maybe even as long as 2 years before we could the stock market could be set up for another big trending move higher. And we've got, as I've explained in some of my videos, we've got a lot of conditions, inflation for one, that is going to suggest that at some point here the economy is going to roll over into recession, maybe later this year. And when that happens, the stock market's going to start that move down into the 4-year cycle low. So I don't think you have to be worried about missing any moves in the stock market. I think we've already had it. Now I think we're transitioning into a difficult trading environment. Expect it's going to last a year or more. Same thing for energy. We've already had the strong trending move. We're probably not going to get it again. So probably not a whole lot of potential in energy, and probably difficult markets for the next year. Precious metals is the one market that I think has the potential to produce a strong trending move as liquidity comes out of stocks and out of energy and starts looking for something else to go into. The one area that is still very undervalued is precious metals. So that is the one area that has the potential for a strong trending move. The only caveat is that gold needs to break that cartel manipulation. If it can do that, then the precious metals, I think, are set up for a very nice move. But they have to break that manipulation. The Fed wants to tamp down inflation, so they're going to throw everything but the kitchen sink at gold. It would kind of counter their narrative if they can get or that they are getting inflation under control if gold or precious metals start going to the moon. Even if they do manage to get oil and some of the other commodities at least in check and in a sideways grind, if gold breaks free of the manipulation and really starts to shoot higher, that would kind of negate the narrative that they are indeed controlling inflation, which I think it's way too late and far too little to control inflation at this point for the Fed. But they may manage to transition stocks into a difficult sideways market and energy into a difficult sideways market. Metals, the only market I think that has the potential for a big trending move in the weeks and months ahead.